Ladies and gentlemen, welcome to the Fiscal Philosophy YouTube channel where Medical Properties Trust is, well, it's the cult stock. I'm the cult leader, as they say. And wow, what a week we have had. Earnings sent this thing catapulting. All right. We're up about 17% on those earnings. What happened? Well, it seems as though we'll say the fundamental turnaround story is now truly and well in play. I'm going to give you basically three very key points that were addressed on the conference call, just in case you weren't able to spare the hour to catch the live stream yesterday. And so you can go into the weekend with the bits and pieces you need to focus on to decide, what are you going to do from here? Are you going to keep buying? Are you going to just hold? Maybe take some profits, although that might be a little premature. But anyways, here are the little tidbits that we heard on the call that deserve a little bit more focus. Okay, first point here is secured financing and debt. So secured financing, they just raised like $2.5 billion worth. And they mentioned that it was overbooked, which means that the demand was greater than what they were offering. So they were able to negotiate on coupon and get slightly better than what some fudsters were anticipating. Now, the reason this was important is because, of course, debt maturities from 2025 through 2027, it's a lot. It's like half of the total debt that they even have on the books coming due in that short time frame. These secured financings have a maturity of 2032, so that pushes some things out another 7 years from this point. That's important. Now, with this, they have the liquidity to address debt maturities through October of 2026, according to the call. So basically, for the next 18 months or so, they're pretty well set as far as having enough liquidity to address any upcoming debt maturities, which means that moving on to my next point, those new operators can ramp up in terms of their own operations and in the rent that they pay, because there's a ramp up period with that as well. And so though they should be at full rent payment by time there's any more debt maturities to address, and the improved cash flow situation should make them a more appealing candidate for other financings. Now, back up to point one, we have the fact that they asked a question, basically percentage-wise, how encumbered are your assets, basically, as a percentage. And they had mentioned that they're allowed to encumber up to 40%. And they actually said we're allowed to encumber up to 40%, but we're only at about half that right now. So that tells me about 20% leveraged on their assets as of right now. Somebody correct me if I'm wrong. But and they're allowed to go up to 40%, so they're using half of what they could in that instance. So room, again, to do what they need to do if they need to do it. Also, interesting, the buyers, that were participating in this raise that funded these secured financings, probably institutions. Now, who do analysts work for? That would probably explain, and this is some speculation, of course, but it would seem to explain why there was so much more analyst interest on the earnings call this time versus the previous earnings call. And I think the coverage was a lot better. The analysts actually did some homework and asked some good questions, like the encumbrance question is just an example of that. As far as the Steward replacements go, yes, most of them are now cash flow positive already, in spite of the fact that there is like a ramp up period because of the way the billing cycle works with Medicare, Medicaid, and private insurance. But meaning you render care, you pay the costs for staff and supplies up front, and then after that you bill Medicare, Medicaid, or like United or Blue Cross Blue Shield, whatever, and then they cut you a check sometime after you bill them. So there's like a whole billing life cycle, and usually it takes a bit of time before what you're actually like receiving in checks from Medicare, Medicaid, and insurance actually outweigh the costs that you're putting out to render care and like do surgeries, etc. So already, even though they're again early days, these operators only took over in the later part of 2024. Most of them are already cash flow positive before rent, and as far as the ones that are due to start paying rent or have had a need to pay rent, they've all paid on time in full. In fact, they said the largest one, even though it's not March yet, they paid March's rent early. So it looks good there from the perspective of what MPW can expect cash flow wise, as far as rental income from these tenants. It seems like the ramp up is in early days, but going as expected or possibly a little better than expected. And then finally, the kind of one question still in the air is this Prospect Global Settlement Agreement. It's pending court approval. There is a sort of a debt waterfall where the MPT basically agrees to become a secured creditor, which puts them kind of at the front of the line, only behind the senior dip financing, which is, I think, only like 25 million or something like that. Correct me if I'm wrong. So basically, as assets are disposed, the funds are distributed per this debt waterfall that they have, and MPT gets kind of first dibs in most of the tranches. So they're likely to get a pretty decent recovery from that, but management didn't want to speculate too much on anything with this because still this agreement is pending approval from the court still. So nothing is like quite set in stone yet. So that's kind of where we're at with this. So keep all of this stuff in mind when you're thinking over the weekend, what do you want to do with the stock from here? I am actually back in the green on the stock for the first time in a while. So that's exciting news. And hey, it's still pretty heavily shorted. So now that the fundamental turnaround has taken place and that there's general interest in the company again from analysts, maybe we get our squeeze. Who knows? Thank you for watching. Also, one point I forgot to mention earlier is the dividend was not discussed, though from the call, didn't really get the vibe that a cut was on the table, but you really never know. In any case, thank you for watching. Please like the video for the algorithm, subscribe if you want to help me grow my channel. Make sure also that you consider joining my Discord linked in the description if you're into this stock or any of the other stocks I talk about. And make sure you catch me every Saturday, 8 p.m. Eastern, Cashflow Kings Live, as well as following me on the X platform at Mr. Macho Mog. I appreciate it. All of it's linked below. Also sponsored by Moomoo. Maybe check them out, deposit, enjoy the platform, enjoy some of the benefits, helps the channel out. Take it easy.